So we may need to may need to figure that one out. But in the meantime, you can't hear me. Okay. In the meantime, maybe we'll have Sonia grab you backstage and figure that out. Let's see.
Oh, there we go. Now I can hear you.
Okay, yep. Perfect. Excellent. All right, we'll get into it. So the final panel here, Dan Tapiero, Matt Hougan, and we are talking about Bitcoin as a hedge against monetary debasement in a macroeconomic perspective. And we've got some of the best macroeconomic heads here sharing the stage with me today. So excited about this panel, and let's get into this a little bit. So one of the, when I was thinking about what would be interesting to hear from a viewer's perspective, both of you guys talk with industry leaders in the space in traditional finance and in investment management. And I think what would be helpful from your perspective is to answer the question: does the world even understand that they need a hedge against monetary debasement? And what does the landscape look like in terms of the people that understand that they need a hedge? And maybe, Matt, we'll start with you. I know you had a recent panel at Barron's.
Oh, man. Dan is the real macro czar here, but I'll offer my 2 cents. I think the world knows that they need something. I think the world knows that things can't continue forever the way they are. Versus when I started at Bitwise 7 years ago, I didn't hear many people complaining about the size of the federal debt or the size of the annual deficit. Those have blown out from things that felt vaguely under control to something that feels like drunken sailors are at the wheel. I mean, we have a $2.6 trillion annual deficit. That's absurd. The debt is up at $37 trillion. So I do hear from institutional investors on an increasing level that they know they need something. They need some way to hedge against this risk. They need some way to hedge against outcomes that felt very unlikely 10 years ago, unlikely 5 years ago, and now feels somewhere closer to, unfortunately, inevitable in a lot of people's minds. So, what I hear, I'd love to know what Dan hears, but what I hear is people now recognize they need something, and they're reaching to gold and they're reaching to Bitcoin. And that's why they've both done well over the past few years.
Yeah. Look, I think the original reason for Bitcoin's existence was to have a monetary asset that could not be debased. If you go back to 2008, I think there was a view back in the end of 2008 and 2009, sort of during the founding of, or the beginnings of Bitcoin, that the authorities were going to have to hold negative real interest rates for quite a long time. And that's in fact actually what did happen. And that Bitcoin was the perfect antidote to that, because there was no government behind it. There was no monetary policy. There was certainly no debt. No one could tinker with it. So I think at its very foundation, Bitcoin has always been about a hedge against debasement, whether it was of a specific currency or the debasement of savings over a longer period of time that's brought on by negative real interest rates, right? And so to get ourselves out of the 2008-09 crisis, negative real rates were held for quite a long time. And in fact, if you were smart enough to have purchased Bitcoin at that time as a hedge, you've done pretty well. And I would say the same thing vis-a-vis gold. In fact, I sort of did have that similar idea and launched my physical gold business, GBI, right at the end of 2008-09, because I was worried about debasement. I just wasn't smart enough to understand that the digital form was going to be worth, 100,000x of the physical form, physical gold, which has done a 4x since that company was founded. But, 4x is a dramatic under-improvement. So I would say that's always been embedded in the DNA of Bitcoin. I mean, I don't think we should talk about the past 15-year history. I would just say, bringing it up to today, I mean, Matt makes the right point that the deficit has gotten very large. And I think there is a view in the administration that they have to do whatever it is that they can right now to make sure that that deficit doesn't get larger. Unfortunately, I think when you decide to tighten many different levers of fiscal policy all at once, you need to do that with a monetary offset or a coordinated monetary offset. So you have Doge, which is actually getting rid of departments wholesale. You have fiscal tightening, i.e. reduction of spending by many of those departments. And now you have the whole tariff situation. And all of these, those three things are out there in a way to try to reduce the deficit. Now, fiscal tightening is of that nature hitting all at once will have a dramatic impact on growth. And so I think GDP this year and growth generally will be softer, potentially a lot softer. And that can be okay if there are monetary offsets. So if the dollar weakens, as we've seen, that's okay. If interest rates are cut or go down, that's also an offset. The problem we have today is that all this fiscal tightening is being attempted without those other offsets. I think if the dollar were to go down another 10%, as it has in the past few months, if it were to do it in the next few months, I think that would almost be a danger signal. And interest rates have been stubborn at these levels, and the Fed is not really looking forward and saying, okay, well, we're worried about GDP growth, even though they should be. We're worried more about an inflation problem that actually I don't really think will trump the growth, literally trump the growth problem. So we have a situation today where we have a policy mix that many investors think might not be sustainable, and therefore you have a move to gold. And I think also to a lesser degree, Bitcoin right now. But I think that the dollar going down 10% in such a short period of time is a reflection of foreign investors' concerns about our policy mix.
Yeah. If I can just add two things on, I agree with everything Dan said. One thing I do think it's fair to look back 15 years. Dan accurately did that, but I think it's important to note that 08 was really a Rubicon in terms of how we manage these situations. Like, it really did fundamentally shift in terms of the development of this big red button that governments have learned to push anytime there's any sort of wrinkle. And then in terms of the policy box that we're in today, and the reason I don't think it will sort of sustain through the difficulty, one of the challenges we have today is, even if it transpires that we, do some version of austerity and raise revenue through tariffs and cut the budget, we don't get to sort of accrue any real benefits from that because we're underwater now, right? Like, we have to claw back up to normal, and then we're in normal. So, usually when you do difficult things, you have to then do nice things. And I think there's a desire to do nice things like cut taxes, et cetera. I just think that's going to be very difficult because we're starting from such a underwater position. And so I do think we'll get to sort of like a monetary offset relatively quickly in this market.
I would just have one thing, Jeff, and actually, I'm sorry. Go ahead. I'll let you.
Yeah, it's a challenging. I mean, there's so many variables to take into consideration, right? I mean, you've got interest rates, you've got asset classes, you've got bond market, equity market, tariffs, global trade, politics, and you've got all of these different assets that are waiting and trying to find a place in this market environment all at the same time. And Dan, as you acutely pointed out, right, gold is has been clocking all-time highs. We got a $20 trillion asset. Seems like a lot of capital is flowing into gold. And so that's the market saying, like, I need a risk-off asset that can capture this kind of monetary debasement hedge, which it has done for, thousands of years, right? It's been done for thousands of years. Gold has been a good store of value, but now you've got this new asset class that nobody's ever seen before 15 years ago, with Bitcoin, that is truly finite, truly scarce, and has a lot of the same qualities as gold. So one of the one of the components that I think has scared a lot of people from Bitcoin being a risk-off asset, and Matt, I know we talked about this previously, is the volatility of Bitcoin as an asset class. You can go back and look at the performance, and it's performed incredibly well. It's outperformed every single asset on the planet, but there's this huge volatility component, and it seems like a majority of the market is misconstruing volatility as risk, and not necessarily understanding the separate components. So I would love to dive into this volatility of Bitcoin, the narrative around it, the narrative around risk, and how you see that, how you guys see that evolving. Because I think that's just something that the traditional financial market has really failed to grasp so far.
Well, I mean, I would just say that it's a new asset. So it's not that the volatility is unwarranted. There's price discovery takes a while. And I just, many of the large, I would say, capital allocators or large investors, who would come to the space are not there yet. So it still feels, I mean, to me, it's still very retail oriented, despite the fact that BlackRock is there now, and Bitwise, and you have ETFs, and there are some ways for institutional investors to be involved. It's still dominated by individuals. And so individuals are not really professional investors. And so when a market gets mature, you have more professional investors, and they dull the volatility. We see all this crazy extremes and swings because people are panicking at the highs, and they're panicking at the lows, and retail exaggerates both those highs and lows. Bitcoin's volatility has dropped from 10 years ago, and I suspect over time it will drop. But from my perspective, I mean, the volatility is a healthy thing. You're not going to get the returns without the volatility. So I wouldn't say that, you said before, oh, well, volatility means, is not equivalent to risk. I think it is. Maybe it's not equivalent to risk of going to zero. Right. I think many of the, alternative cryptocurrencies, some of the less relevant ones, they all go to zero. In my world, Bitcoin and then sort of Ethereum have achieved network effect. And now, perhaps also Solana is moving in that direction. But all the other ones are venture projects, and they all do have the ability to go to zero. Not all of them, but many of them. And so the volatility that we see today in Bitcoin is a fraction of what it was 10 years ago. But we continue to see that volatility in some of the alternative smaller projects.
Yeah, I have sort of a pointy-headed view on how Bitcoin performs during periods of crisis, which maybe I'd share on this panel, which is, if you look at Bitcoin's historical response to macro volatility, it tends to fall in the short term and then tends to recover and go above in the long term, right? I call it dip and rip. And that's happened repeatedly, right? If you look at the average return of Bitcoin on a day, the S&P 500 is down 2%. It's minus 2.6%. But then if you pan out 3 or 6 months, it's dramatically outperformed the S&P. It's outperformed gold. It's outperformed everything else. And from my perspective, that actually makes actual mathematical sense. If you think about Bitcoin pre the start of tariff confusion, let's imagine it's a store of value asset and it's chasing a market that's worth $20 trillion, which means, it should be $1 million asset at some point in the future, let's say 10 years in the future. If you're valuing it today, you then use that addressable market and discount it back to its present value. And that's sort of what the market is mathematically doing. If you have an event that grows the long-term store of value asset, so it's now going after a $30 trillion market, because the world made traditional fiat currencies less secure. So its value should be $1.5 million. That doesn't mean that the value today should go up if the discount factor also goes up because the market has been more volatile. And I think that's why you get this dip and rip. It's consistent, to my mind, with being a long-term store of value asset that's still emergent and therefore more volatile. You get the dip and rip perspective. It's actually what sort of classic academic finance would tell you would happen in these sorts of situations. It's just confusing for people because they have a hard time holding both of those ideas in their head.
Yeah, interesting perspective. Yeah, wow. Okay, so with that in perspective, then I think, Dan, I was watching a a conversation you were having that you don't have any exposure to the old world, which I think is a fascinating
Well,
perspective.
gold. I still have gold.
Gold, yeah. We'll just say, I guess, like yeah, equities or whatever that may be. But
You caught the tail end of a conversation that was not supposed to be.
okay, all right. Well, all right. Old world. We'll say gold. We'll say gold. We'll say Bitcoin. But I think this volatility component, is it too volatile to be a hedge? How can investors or businesses start to see this as a unique asset to add to their portfolio?
Look, this is very easy. Honestly, it is a long-term asset. I think it's nearly impossible to trade on a short-term basis. I was in the macro hedge fund business for 25 years. There's no asset that I think is as difficult to trade, let's just say week to week, month to month. The only way, especially people listening, the only way that you can hold this to benefit from what I call the monetary sort of value, the monetary premium that is being put to it, is very minimum a 10-year period. And, if you want to hold it because you think it's going to be up next year, that's really just not a good idea. I've traded hundreds of markets. There's no market that even comes close. And I don't just mean Bitcoin. I mean the entire sort of blockchain space. It's just littered with problems, and the amount of analysis that you need to do to actually understand whether some protocol might have lasting value 10 years from now. I mean, it's tremendous. You have certain funds with teams of cryptographers and blockchain developers, computer scientists on their teams, just trying to sort of take apart the code of certain blockchains to figure out which chains are going to be best applied to certain use cases. I mean, and then you have to trade, the volatility of those things. I mean, it just, when I first had the idea for these funds in the middle of 2019, I looked at sort of the overall digital asset ecosystem. So all of the different projects and companies in the space and what they're doing. And in the last, let's just say, I would say 3+ years, that map that I look at of the digital asset ecosystem has probably grown by like 80 to 90%. So, and in ways that no one would have anticipated. Just as an example, I mean, 4 years ago, stable coins were zero. There were no stable coins. I mean, they were tiny. And last year we settled $10 trillion worth or more. And now the pace has increased. 3-4 years ago, there was no such thing as DPIN, and there were no NFTs. There was no, I mean, I can go on and on. DeFi was barely in existence. That was also, almost zero. So, if I look at all the sectors and subsectors within the digital asset ecosystem, I don't know how any person trading this world can even keep up with the way that it's morphing and the growth. And so if you don't have at least a 10-year view, whether it's Bitcoin or whether it's, on a specific project or specific area, I think it's going to be really tough.
Yep. It's like long tail liabilities, right? So for me, my background's in insurance and reinsurance. So like I take this perspective of portfolio management and think about long tail liabilities. If you have a liability that's 10, 20, 30 years, you could start to think about making a small allocation to Bitcoin to protect against a hedge of that liability running away from you greater than your assets are growing, right? If you got a bond portfolio with a 10-year duration, 20-year duration, it's going to be tricky. If your calculations of debasement are off by 25 basis points, your model's broken. And so it's helpful to have another asset that's you add to this portfolio of, efficient assets to, manage your portfolio.
Well, we should throw the question back at you since you have an insurance background. Why are there almost no insurance companies involved in the space?
Regulation.
Right.
Yeah.
So,
So there's these rating agencies and regulatory hurdles, right? So the rating agencies don't give the insurance companies any capital credit for adding Bitcoin to the balance sheet. So you have zero ability to leverage against it. And unfortunately, like the insurance companies have to comply with these rating agencies in order to access the capital markets. So it's really tricky. Now they can't add spot Bitcoin, but they can add derivatives, right? You can hold an equity or you can hold convertible debt, and you're starting to see this expansion of securitization of Bitcoin, which I think could be really valuable for some of these long-term liability asset managers, where you can get a lower vol Bitcoin directional Bitcoin product to manage your portfolio and just skirt around some of the regulatory and rating agency hurdles. But unfortunately, the rating agencies are this kind of industry-wide lid on innovation. And I think, we're seeing companies like Stone Ridge that are just absolutely killing it in the insurance and reinsurance space because they found like a back door in order to access some of this exposure using Bitcoin. It's fascinating.
yeah, I mean, by the time everyone crosses their T's and dots their I's, the, the 10-year view for Bitcoin won't be what it is today or what it was 5 years ago. So they'll have lined it all up, and then it'll go sideways for 7 or 8 years.
Yeah, maybe miss the boat.
I mean, but it does show you really how early we are still, even though it's remarkable. We keep saying, oh, we're early. I mean, my first involvement in the space was 2012, so it doesn't really feel early, but literally, I mean, there are very few institutional investors. I mean, we have a handful of them, but you know what? I mean, your point about insurance companies being able to do some different things, I would recommend that they could just buy Coinbase, right? Coinbase is a public company. They can own equity on their books, and Coinbase, will benefit from growth in this digital asset. So, I don't know. As you said, maybe that's a solution. I don't know.
Yeah, all these different vehicles. Hey, Matt, over to you. I know you went to a conference, right, and had people raise their hands on who can add Bitcoin.
That was what was flashing into my mind when y'all were saying it's early. I was at the Barron's Top Teams Conference, which is some of the top advisors, financial advisors in the US. These are people with, $1, $5, $10, $20 billion plus in assets under management. And I surveyed the room. I asked them how many of them could buy Bitcoin in an ETF wrapper or any other way for their clients. And less than half the room could still have access to it. So literally, this is not even institutions. This is not insurance companies. These are financial advisors. They're far down the spectrum. And most still to this day, at least half of the largest financial advisors in the US physically can't buy it on behalf of clients. That's how early it is. And it'll be years until they do, right? Now it's growing. More and more of them are. But it is extraordinary that it is still early, but it is still exceptionally early.
And we're just talking about America also. And now with this new administration, it does seem that the profile of Bitcoin and cryptocurrency and blockchain has been elevated dramatically. So we're not even, and look, this is the first truly global asset probably of all time, maybe outside of gold. But I mean, certainly it's owned very widely. Think about other places around the globe, even think about Europe. I mean, if the US is here, I think most of Europe is way behind. Asia, it's not clear to me really where Asia is. I don't know what the unified view is out there, if there is even one. China seems to be hostile to Bitcoin and cryptocurrency. That keeps a lot of the Asian players maybe at bay. But I mean, just think about what Matt said. We're talking about relatively sophisticated wealth managers And we're not even asking them about what their exposure is. You just ask them whether they have access or ability to own it, right? So what do they own? 1% of their NAV or 2% or something like that? It's still tiny. And then we can throw in your insurance companies and pensions and everybody else. And basically you're looking at 99% of the world that does not have exposure to the space. That's basically where we are.
Does not have any exposure. Yeah.
At a point where, 96% of Bitcoin is already owned. That's the other part of that equation. So those are just two very different numbers, and they have to collide, right? That's the story of the next 10 years, is those two numbers running into each other.
I've seen Samson Mouse put out this image. It's got this huge triangle of like available capital, like flowing into this tiny little triangle of available Bitcoin that's left. And it's, we're at this point where we're crossing the chasm, right? Where more adoptions coming into play. And I mean, you see us, right? Matt, you're wearing a suit, like you got a polo on, Dan, and I'm wearing a collared shirt. 8 years ago, that was not the case, right? It was like all these crypto punks in their basement just coding Bitcoin and on the dark web, like paying for drugs with, an alternative currency. And now it's really hit mainstream and thinking about different ways to use the asset class, which has become pretty fascinating. And just thinking about the idea of like financial advisors and wealth managers. I mean, their job at its base is to preserve wealth, not necessarily grow it. So you start to think about, okay, what's the role of an asset manager? Now you see this volatile product that's come out of nowhere and you misconstrue volatility for risk. And you start to think about, well, I shouldn't add this because my job is to preserve wealth and I get paid on preserving wealth. And, there has to be this kind of mind shift as well in approaching the asset. And my background in finance, having an understanding of Markowitz modern portfolio theory, it's a no-brainer, right? Like you add a new asset, it's got different risk return metrics to a diversified portfolio, you improve the return and reduce the risk of the entire portfolio. And it's just here in front of everybody, slapping them in the face, and they still will ignore it and not add it, and you can't touch it. It's fascinating.
Well,
It
it's
is
so
fascinating.
different. Yeah, it's so different from what's come before. And it really is, the tech of it is very complex. So it's very hard to understand how the sort of the functioning of, let's say, the Bitcoin network, and how do the blockchains come together, and what is the proof of work algorithm. And, in a way, I think about it, a little bit like the invention sort of the engine in a car. All of us know that the engine drives the car, but none of us today could actually take apart the engine and put it back together. And so think about an engine popping up whenever the first engines did in those cars in the early 20th century, opening up the hood and saying, hey, this, piece of metal, this is going to drive the car forward. And you would have been thinking like, oh my goodness, that is insane. How's that possible? Well, it's a whole engineered structure. And engineers know how to take apart, an engine and put it back together. But most of us, we just, get in the car and step on the gas. And so I think today with Bitcoin, it's even more difficult than taking apart and putting back together an engine, just understanding the technology of it. I mean, look, I remember when there were no computers, certainly no personal computers, when there were no phones, when there was nothing. So people 10, 20 years older than me literally grew up with not just no internet, like semiconductors were not, functioning at scale in the 60s and 70s, right? So you have a lot of people who manage a lot of money in their 60s and 70s today, I mean, age-wise, and they just can't possibly comprehend a money that is neutral, that is decentralized, where there are validators on a network that validate the legitimacy of that transaction. I mean, it's insane. I mean, if you think about it, like, where did this come from? It didn't come from, the analog world that we lived in for, all of human existence, really. So I wouldn't give people too hard a time for not getting it, but it takes a lot of sitting on your butt and reading and listening. And my problem was that just in 2012, 13, 14, 15, there wasn't the academic, there wasn't enough intellectual, I would call it scaffolding. There weren't enough articles, there weren't enough podcasts. It was very hard to understand how Bitcoin worked and why it was something. And that changed, I think, in 2019, 2020. You had Safed Amos's book, The Bitcoin Standard. Another book I like is Jan Pritzker's book, Inventing Bitcoin, which is 100 pages, very nice little explanation of how it actually works. So, today there's no excuse. There's lots of literature. There are a million podcasts, right, Matt? I mean, you and I are asked probably every single day by somebody to go on a podcast. So I the interest is out there, and there's really no excuse to not sit down and really try to figure out what this whole thing is about. But
I'm optimistic that it'll happen at an accelerating pace.
Yeah.
I'll just add one fun stat. We do a survey of institutional investors every year. We've done it for 7 years, and we ask them what's preventing them from allocating to Bitcoin and crypto. And a lot of people would assume it's volatility, or I don't know how to value it, or what's the cash flows, or isn't it criminal use? Actually, the number one answer for 7 straight years was regulatory concerns. And so I raise that because I do think over the last year and a half, we've knocked down 3 major barriers. We've knocked down access via the ETF. We've knocked down regulatory concerns via the change at the SEC. And we've started to knock down concerns about reputational risk. When you have Larry Fink out there talking about Bitcoin, and you have Stan Druckenmiller talking about Bitcoin, the reputational risk come down. And I actually think those were 3 of the primary gating factors. There are others, but I really think we've overcome those 3. And I think that's going to let the water flow through a little bit faster than it has in the past.
Yeah, I would agree. And I would just, one caveat point is that that's in the US. Remember, this is global, and all of these different countries have different views and different, about regulation and different laws. And so I think, maybe the US can lead the way here and then others will follow. But I still think it's probably a little slower than we want, because I don't see everyone having a coordinated view on how to regulate not just Bitcoin, cryptocurrency, and all the various businesses that are active in the space. So I think it's, but look, the US is making headway now.
Yep.
So I think.
Yeah. It's super tricky, and the game theory is fascinating too, right? If you've got this first mover that moves in the space, all of a sudden you have this a little bit of a frenzy where you feel like you're late, and it will be interesting to see, once the U.S. government does announce that they've added Bitcoin to the strategic Bitcoin reserve. They've done it in a budget neutral way, and they announce it. I think that will be a very fascinating time. I don't know if it's going to be this year. I don't know if it's going to be 5 years from now. Who knows? But they've got the ability to do it now, and I think that will be a really fascinating moment in time for this whole timeline. But you guys pointed out some really interesting components, right? We're going analog to digital. It's like going from from cash to credit cards to Bitcoin, and I think many of you have probably seen that commercial is like 20 seconds long of filming people at a Burger King in 1985 trying to use a credit card. And they're like, I will never use a credit card. I'm using cash only. And then, fast forward today, I don't know any of my peers that carry cash. And now you have kids that are born today being born with AI and, an iPad in their hands at age 6. And they're going to be wanting to they're going to want to use a digital currency because that's
Yeah.
going to be the ecosystem that they were born with and grown up with. So evolving landscape of evolving population. Yeah, it's a really interesting time. And then what, Matt? One more thing that you hit on, right? You had the access via the ETF and the regulatory environment. Also, really fascinating. We talked about accounting in the prior panel that we did, FASB fair value accounting. Now you've got these companies that can hold it on a balance sheet and market to fair value, which is a huge win. And then the alignment of incentives with the SEC with SAB 122, the repeal of SAB 121, and now banks can hold and custody Bitcoin, which is just a huge change, and it's an alignment of incentives. Now all of the banks have incentive to create this custody solution and potentially hold this new asset class on their balance sheet. And now anybody that banks with that specific bank can draw on a line of credit based on their cash and their Bitcoin and other crypto assets held with that specific bank. So I think this revolution of collateralized finance with getting traditional financial banks involved as well is going to be just fascinating to watch.
Yeah, I agree. I mean, I think it speaks to Bitcoin's strength, how much it accomplished given the scale of forces arrayed against it over the past 4 years. And you mentioned SAB 121, literally said banks can't touch Bitcoin or they'll die. That's an absurd approach. The SEC sued every major entity operating in the crypto market and issued subpoenas to literally everyone, which cost untold billions of dollars in legal fees and distraction. You had a senator with a war on crypto. You had China, variously banning it. And yet, the asset went from whatever, 10,000 to 50,000 and made significant progress. I think that speaks to, today it's been completely reversed. It's now an extraordinary tailwind from all those perspectives. And I don't think the market has caught up to the long-term impact of that. But it really speaks to the strength of this asset that it was able to stand up against the full force of the U.S. federal government in all its aspects and still make progress. I think it's really remarkable.
Yeah, I mean, look, it was totally in 21, it was totally banned from China, and all of the Bitcoin mining at the time was essentially in China. And people used to worry, they said, well, if China bans it, then it's over because they have all the Bitcoin miners. And what happened is, the market dipped for a day or two. Literally, it wasn't even that much. All the miners left. Half of them are now in Texas or whatever it is. And so it's a meme in the space. Like, they come after you, or what that whole thing is. They've tried to kill Bitcoin so many times. I think there are 400 different news or media headings. Bitcoin is dead. Every 6 months, someone will post on X, a new number of how many media publications have said that Bitcoin is dead. So clearly, it's not dying now. But look what you have behind you. You've got the white paper behind you. And even if you're someone who's involved in Bitcoin many years, do you really understand the white paper? Like, it's complicated, right? So again, I want to be a little bit forgiving, of people generally. But I think you don't need to be able to get through the entire white paper to understand that this is definitely a massive macro structural change. And I call it a great invention for humanity, because we're not going to talk about it today, but the actual code that is behind Bitcoin has many different applications. And I think at one point will eventually touch everything we do. I certainly think that all things of value that exist in the world will eventually reside on some blockchain. It may not be, necessarily on the Bitcoin blockchain, but I think that all things of value will then become fungible, and you'll have instantaneous settlement. And it'll be a wonderful world with zero friction and zero counterparties, and people will be more independent than they've ever been before.
Absolutely. I completely agree. So, and we're getting close to the end of time here, so maybe we'll wrap it up with final thoughts. But a great invention for humanity. Completely agree with you. It's programmable money. We're talking about a $1.7 trillion asset. It's the 8th largest asset on the planet. Many people don't recognize that it's the 8th largest asset on the planet. It's right behind Amazon and silver. And I think it's a helpful data point to recognize, right? You've got this decentralized asset that's global, spread across the globe, and people are literally working to, expand on the Bitcoin network and the Bitcoin ecosystem in a completely decentralized fashion. It's since I've quit my job in reinsurance, I've now said that my boss is the computers, and it's weird making that conceptualization, right? My boss is the Bitcoin network, really. So anyway, I wanted to thank you guys. Thank you, Dan. Thank you, Matt. If maybe kick it over to you guys for final thoughts on, the macro perspective on Bitcoin. I think you've provided some really interesting perspective. I will start with you, Dan.
Well, I would just say, and I say this to all my analysts, it's never too late to do the right thing. So, you may think you're late, but, allocating 1% of your, portfolio or whatever to Bitcoin, it's very easy to do. Just try it, just try it and then start learning about it. And I've never heard anybody, Matt, maybe you have, I've never heard of anybody who dipped their toe in and then didn't realize that there was this whole new world out there and then, embraced it. I mean, you, Jeff, you've left insurance or reinsurance, which I think was a very good move. I don't see a lot of future in the old world. I think the insurance companies, though, will likely have to embrace the new world. So
yeah, I love that. I love what Dan said about just 1%. Jeff, you mentioned it's the 8th largest asset in the world. I would note, just from a benchmark perspective, that if you're at 0, you're short against the benchmark of global investing. So just getting to the 1% Dan mentioned is a neutral view. If you're positive on Bitcoin, you should be at more, potentially much more than that. But if you're at 0, you're actively short. That's an interesting take. Maybe that's your view. But know that that's your view. You're not making a neutral judgment at 0% anymore. It's part of the global macro toolkit. And so, most neutral people should get to 1% quickly. And then those of us who are more positive, like myself, and I believe Dan, are going to be a little bit more invested in that.
Yeah, I wouldn't be short Bitcoin here. I think it's going higher, right?
Exactly.
All right. Thanks, Dan. Thanks, Matt. Appreciate the time. And look forward to catching you at the next event. Appreciate it.
See you. Thanks for having us.
We'll see you.